right, welcome to the show where we share the stories of the many who intersect with our healthcare system but are rarely heard from. My name is Kevin Poe, founder and editor of Kevin MD. Today we have a special sponsored episode. On the show we have Dr. Zwade Marshall and Dr. Kenton Allen. They are both physicians and they're here to discuss a topic familiar to many of us, the financial challenge of being a young doctor, and the solution they have created that is disrupting the personal loan industry for doctors and dentists. It's called doc-to-doc lending. Zwade and Kenton, welcome to the show.
Thank you for having us, Kevin. We're both consumers of your content, and so we're thrilled to be here with you.
Thank you so much. So I'm going to ask both of you to introduce yourself and to really share your story and your experience with the financial challenges early in your careers. Kenton, why don't you go first?
Kevin, thanks again for having us. Like Zwade said, we're excited to be here. We are very familiar with Kevin MD and have benefited from the content. So to be part of things today is exciting for both of us. I'm a practicing anesthesiologist. I started my career training at Dartmouth, was part of an MD MBA program there. And upon graduation, went to Brigham and Women's Hospital to train in anesthesiology. That's where Zwade and I met. We were co-residents there in Boston. I went back to Dartmouth to specialize in regional anesthesia and acute pain, and have since set up my practice in New Hampshire, where I'm the incoming president of the New Hampshire Medical Society. And my history and experience of needing access to capital early in my career came when I was a resident. And when I left Dartmouth, I had $225,000 worth of debt. My salary in Boston was about $54,000 a year. I had two young kids. My wife was a nurse who supported me through all of my schooling, and had some personal and professional goals of herself that she wanted to pursue, which would take her out of the workforce for that period of time. And so if we wanted to move forward on all cylinders, we needed to supplement my residency salary. And we went to some financial institutions to see what that would look like, and were surprised by the fact that I was viewed as high risk. The reason for that was because of the debt I carried. My salary was relatively depressed during those training years. My credit score was immature, not because I had any black marks against me, but just because I had a limited credit profile. And so it was frustrating because by most measures, it seemed as though I was on a successful career trajectory. I had some informal job offers even at that time. But to the banks, I looked like a high-risk borrower. And it's a pretty familiar scenario as we started to share this frustration with people, that we go into medicine expecting to have a rewarding career in medicine with financial stability. But what is less commonly realized is the mountain of student loan debt that it takes to get to that point, the 3 to 8 years of relatively deferred salary during training, having to move from coast to coast and sometimes back again during the training years, which comes with a cost. And for a lot of us, those are the times that we want to start a family, and that strains finances. And once you get out of training, you need to be able to evaluate business opportunities, employment contracts, and whether buying into practices is a good investment. It comes with some financial savvy. And so we started doc-to-doc lending to help soften some of the financial stress around these predetermined pathways that we go through in order to have a career in medicine, in dentistry. And so my experience is not that unique from a lot of people that we speak to and continue to speak to today.
Zwade, I'm going to ask you the same question. Can you just introduce yourself, share your story and your experience with financial challenges early in your career?
Sure. Thank you. I'm a first-generation physician. I'm a trained anesthesiologist and did a subspecialization in interventional pain management. I'm currently in Atlanta, Georgia. I own my own interventional pain practice and was formerly a partner at a large private equity-backed group here in Atlanta as well. As Kenton referenced, we met at Harvard. We did our training together at the Brigham and Women's Hospital, and forged a quick and durable friendship since we were both MD MBAs and had entrepreneurial spirits in common. Prior to Harvard, I went to medical school at Emory in Atlanta. And in fact, the transition from medical school to residency was the critical experience for me to understand the need for our company. I was moving from Atlanta in what used to be a low cost of living city. It's no longer that cheap anymore. Going to Boston, one of the highest per capita rental markets in the country. I needed to borrow first last month's rent and broker fee and did not have the $18,000 to do so. My parents didn't have it, so I needed to borrow the funds. At that time, similar to Kenton, I had a significant student loan debt. It was north of $200,000. My income was $54,000 as a resident. My FICO score was sub 700. I borrowed the money from a private bank and the rate was exorbitant, and it felt unfair because I'd worked hard in my profession and incurred debt that I could not avoid to educate myself. And then I was being penalized for it. So Doc to Doc was created to better serve our peers and their financial needs than banks and big box lenders do.
Zwade, I'm going to ask you this question. And based on these experiences, you and Kenton created doc-to-doc lending, and it makes personal loans using doctor-specific factors. Can you tell us a little bit more about doc-to-doc lending, and what is it that makes it different from traditional banks?
Sure. We created doc-to-doc with the intent of being different because we are doctors and we've lived through those experiences ourselves. So we intimately know the scenarios that lead to our borrower base to access capital. We do consider credit scores and cash flow, but we also give our specific borrower base credit for being doctors by evaluating based on some proprietary physician-based factors. And if I told you what they are, Kevin, I'd have to kill you. But it's important to note that our product is for personal loans only. So it's unsecured, meaning there's no collateral, unlike a mortgage or an auto loan. We also do not require school certification from your financial aid office like other companies may require. Many of our borrowers have been denied loans by traditional big box lenders or have to go through the arduous process of credit approval that quite frankly feels as painful as some of our medical procedures. So our team of physicians engage with borrowers at times convenient for them. So it's nights, it's weekends, it's post-call, whenever. We're there to speak and to engage. And finally, we are doctors, and our name is based upon our initial loans being funded from investments by other doctors. So we view the population differently than all the other banks do.
And Kenton, is it common for doctors to have to borrow money outside of their student loans? And if so, what are some of those common reasons?
Kevin, when we were first envisioning doc-to-doc lending and considering starting doc-to-doc lending, we were surprised in our market research how common it is for doctors to need consumer loans, and even more common to take on credit card debt that can't be paid off in the foreseeable future. Our business to date has further supported that. We've made loans in over 20 states across 26 different specialties in medicine, representing well over 50 academic institutions. So as our borrowers, we count alumni and trainees, faculty at places like LSU, Cornell, Penn State, UCLA, Harvard, Emory, Johns Hopkins, Dartmouth, Howard, UMass, the list goes on. It's not geography specific. It's really a universal phenomena that this path to medicine and dentistry oftentimes requires consumer debt to get from point A to point B. And we've tried to meet that in a way that's friendly. Now, to your question as what are the specific reasons that we see people borrowing, it tends to be around this predictable pathway in medicine and dentistry. So one is with regards to transitions. So transitions from residency to fellowship to your first job, like Zwade, moving expenses, first, last month rent is a very common reason. Another common theme is starting a family, whether it be wedding and engagements. These are things that tend to happen during the period where we have deferred salaries of residency. Starting a family with regards to children, childcare expenses, and we've had people who want to take additional time off more than their employer will support and need the financial resources to do that. We've also seen applications for things such as oocyte cryopreservation in surrogacy. And these are families who don't want to put their career on hold, but also want to start their family at the same time. And those can be expensive. We've assisted with a lot of people who are working to get their financial house in order. So refinancing of of credit card debt, for example. Not only do we improve the rate on that debt, but also improve the credit profile by improving the used to available credit ratio. We see a lot of business opportunities. So these are, as I mentioned earlier, people who want to buy into their practice, want to expand services within their practice, or even support a passive income stream. And these have ranged from things such as real estate to starting food trucks. And then, the last common theme I'd mention are the unexpected, the medical costs related to an unexpected illness within the family, natural disasters, things that you don't budget for that come up and can be particularly stressful within the first decade or two of a career in medicine. And we continue to learn more each day as we work with more and more doctors about the reasons where these stress points exist.
Zwade, having lived through these scenarios of having to borrow yourselves and spoken with so many other doctors who have been in similar situations, what would you say to physicians and dentists out there who may feel like a loan could be right for them?
Sure. I think first and foremost, it's important to know that you're not alone. As a collective, I think physicians feel a sense of shame and embarrassment from needing to borrow money personally. Our team is here to help you do it thoughtfully with full recognition of the consequences of debt. So reach out to us. There's no cost to apply. We only do a soft credit pull. So you get the full benefit of our collective input on your precise borrowing need. Our website is doclending.com. Applying for a loan takes about 3 minutes on our online platform, and you'll receive a call from us within 24 to 48 hours. We're happy to have conversations with our peers and to provide conditional approvals very quickly and efficiently.
And Kenton, what do you think are the most common misconceptions about debt among doctors?
Yeah, it's a good question because we do speak to a lot of people about debt and categorize it into two common misconceptions. One is that all debt is the same. And then the second is common confusion between interest rate and APR. With regards to the first point, debt being the same, I think most doctors are pretty familiar with student loans and home mortgages, which is different than consumer loans, which is a personal loan, which is what doc-to-doc offers. And the difference between the two, first of all, student loans oftentimes are federally backed, and because they're federally backed, regardless of your profile, you're offered the same interest rate. So right now it's 4.5%. Those interest rates really are based on economic conditions as opposed to an individual borrower profile. Mortgages are different in the sense that they're secured, and they're secured by that asset. In this case, it's the home. So in the event that that loan isn't paid, the bank has access to that asset. Now, the difference with a doc-to-doc personal loan or any personal loan is that it's not federally backed and it's not secured. And because of those reasons, the interest rates tend to be higher than those two types of, and again, I think that's a kind of a common misconception between debt types. Now, the flip side, the advantage of consumer or personal loans is that they can be used for almost any reason. We can offer that capital to whatever the stress happens to be. The second point, the APR versus the interest rate, this is important. The difference between the two is that annual percentage rate, or APR, also includes all of the fees associated with a loan. And so when you're making apples to apples comparison and shopping for what loan product might be best for you, really it's the APR you want to compare. Now, the trick is that a lot of times with these pre-approvals, you're given the interest rate and not the APR initially. And so you can think that a loan is looking pretty good, but then when you get all the fees piled in, the effective interest rate, or the APR, is quite a bit higher. And we make this really transparent and open from the time you apply, an interest rate, an APR, and your monthly payment. So you have all the information to decide.
And Zwade, I imagine that you have learned quite a bit in speaking with so many doctors considering a loan. Are there any specific takeaways that you think would be worthwhile sharing with the medical community?
Sure. I think we learn something from every conversation that we have. And though the personal circumstances differ, the career trajectories follow a very similar pattern. Because there's been so much engagement around financial literacy, particularly in light of COVID, we created a platform for these discussions. So in addition to speaking through the individual loan application, and personal circumstances of every borrower, we invite each into an invitation-only community that we created called DocCentral. This is a doctor-dentist app-based platform developed to address the needs for doctors to have a trusted source for financial information. Doctors can share their knowledge and experiences with peers, and our group of expert moderators provide resources for them. Anyone who applies for a loan, whether it is accepted or not, is given an invitation to join. I'll tell you about one of our earliest borrowers and kind of like the arc of what our loan process really does and why we're so passionate about this. This was a young man who went to a prestigious New England or Northeastern Ivy League medical school, matched into a California residency program. He needed to cover relocation expenses, and he was a first generation doctor, did not have the family resources to cover those costs. He applied for a loan from us, and during the application process, which I'm not sure we said this enough, it's a tailored process in which we speak with our borrowers as physicians. So every borrower that comes through speaks to a physician member of our team. During the course of that consultation, we realized that not only was he moving, but he had his board exam scheduled for within 2 weeks after he got to California. Shortly after he arrived, we funded his loan and then sent him a welcome and thank you package saying, "Welcome to the family." And with that package, we sent over some board prep materials for him. Kevin, when he called us back to say that he got it, you can hear the emotion in his voice because we fully understood the stress, the anxiety, the pressure that he was feeling moving to a new city with a new level of responsibility as an intern and having board exams, but also being cash strapped. We aim to provide that support safety net for our borrower base, not just with the money, but with also an empathetic ear that's been there already ourselves.
And Kenton, many medical practices and the personal finances of medical professionals have been significantly impacted by the COVID pandemic through 2020. How has doc-to-doc lending been impacted by COVID-19 over the past several months?
I've yet to meet a doctor who hasn't been impacted by COVID. And, I can say personally, in my practice, we stopped any non-emergent surgical cases for about 3 months. And with that came the revenue that we typically make in our practice. From doc-to-doc's perspective, we saw a significant increase in applications for our loan. And not surprisingly, that increase in demand was so much that we had to institute a wait list to fund our loans. Now, fortunately, in conjunction with that increase in demand was an outpouring of support from individual investors. And these were people who believed in our mission at Doc2Doc and wanted to help support these loans of doctors who either personally or professionally needed a bridge. And that outpouring of investor support was enough that we were able to fund all those loans and today have no wait list and continue to fund loans as they come in. Now, the additional point through this pandemic is that our business theory that doctors are different than the general population has been proven. And it's been proven in that over the last 18 months, which has included this entire period during the COVID pandemic, we've not had one 30-day late payment. And that's across our entire portfolio for all of our borrowers. Not one has been late. Now that compares to the industry where about 16% of personal loans are impaired currently. And that certainly has gotten the attention and allowed us to get even additional funding so that we can continue to grow and continue to assist with, partner with other doctors moving forward.
Zwade, you shared that story about that doctor previously who got that loan from Doc2Doc. I was wondering, can you share any other common scenarios where physicians could benefit from your loans?
I think Kenton alluded to this earlier, but we see one of the more exotic borrowing needs that we didn't think of when we formed the company was the challenging sojourn for our female counterparts that enter into sometimes very long residency and fellowship programs and are concerned about their fertility. And so oocyte cryopreservation has been something that we didn't predict would have the demand it does, but it certainly has been a reason. And I mentioned that because there's some energy in the West Coast in specific where there are movements now to try to have loans cover fertility, student loans, that is, fertility for in-training physicians. And that's not gotten any energy legislatively yet. And so we're happy to be a stand-in for our female peers who are thinking about their fertility and their future. Additionally, we have a lot of young doctors that are entering practices and looking to borrow to become partner or to expand practice lines within their medical practices. And so doc being able to help to fund a larger loan offering from a traditional bank, our loan can help to get their rates more competitive and get points reduced for a larger practice loan. So again, ours is a personal loan. It's not a practice loan, but it helps to get practice loans more competitive. And so overall, our key and our philosophy here is that there's no reason that we deny our loans for if it's a personal reason. And so we only ask why to provide guidance and advice, but not because it's a reason to ever deny a loan for a borrower base.
And Zwade, it sounds like Doc2Doc is disrupting the personal loan industry for doctors. Did you expect to have this magnitude of impact when you first started?
Kevin, this has been a tremendous ride, and I wish I could tell you that we knew it was going to be what it's turned out to be, but we didn't predict this. I think Kenton and I knew the idea was valid because we approach this as academics, right? We're physicians, we're scientists. So we built a hypothesis and began to systematically test our assumptions. The enthusiasm in our base has been the biggest surprise. The fact that so many of our borrowers refer their friends to us has been amazing. And similarly, the investor base has been tremendously supportive. We've got faculty members and physicians across the country that tell their trainees about us as a course of just mentorship to them. And that tells us a lot. When you're willing to put your reputation on the line and recommend a company, and our company, to people that are putting their implicit trust in you, really says we're doing something right here. Could we have predicted that a global pandemic would ensue and financial markets would stop giving loans? No. Could we have predicted that other lending companies would see the huge spike in defaults, as Kenton mentioned, at 16%? No. And then could we have even imagined that a company of our size and scale and stage would have our borrowers have absolutely no defaults or delinquencies? Absolutely not. But we're excited about all of this, and we look forward to providing an alternative way of financing for physicians compared to the status quo, which is thoughtless when it comes to our unique population, our unique challenges, and the onerous burden of the financial toll that becoming a physician takes. I think we're a tough group in general to be sympathetic towards because folks presume that doctors are all financially well off. The reality and part of the embarrassment is that many of us struggle for a very long time just crawling out of debt because it's so expensive to get to the point where you're finally a physician that can actually charge for your services.
Once again, this is a special sponsored episode of the podcast by Kevin MD. We're talking to Kenton Allen and Zwade Marshall. They are both physicians and they are co-founders of Doc2Doc Lending. Now I'm going to ask both of you the same question. Kenton, what is your take-home message that you want to leave with the Kevin MD audience?
Kevin, we just want to let people know that if they find themselves in a situation similar to the ones that Zwade and I have both lived through, and there's a financial stressor that you need some assistance with to get yourself from point A to point B, to help fuel your success, whether it's professional or personal, that Doc2Doc Lending was created to help you do that in a way that's fair and recognizes that you are valuable by the fact that you're a doctor, and takes that into account, not only in the way that we've designed our company in the process of applying for that loan, but also in how we underwrite and determine how much that loan costs. Basically, we take into account doctor-specific factors to determine an ultimate interest rate. And we do this in a way that's as fair and transparent as possible for this specific niche population. We don't have any prepayment penalties because we recognize that salaries change dramatically. And for those who want to get out of debt quickly, that option can be there at no penalty. We design our process with the demands of our career in mind. It's a short, automated process online that can get you the information you need quickly with no damage to your credit score, so you can decide on the spot whether you want to move forward or not. So again, this company was founded by doctors with investments from doctors to help other doctors, and we're here. And Zwade, myself, and the rest of the company, we're here. We're here to help when those instances arise.
Mm-hmm.
And Zwade, what is your take-home message that you want to leave with the Kevin MD audience?
I think Kenton said it eloquently, and so I'm not gonna go after that. But I'll just add that I'll just emphasize the closing point here is that the company was conceived with physician needs in mind, with their schedule, with the burden of their financial obligations in mind by other physicians. And they're gonna realize when they speak with us that we're different, and we aim to be different by creating this product that's tailor-made for doctors. And so if there's any thought, if there's any struggle around finances or needing to access capital, don't struggle with it. Just reach out. Doc2Doc, that's doc, number 2, doclending.com. And we'll be happy to take your questions, to process applications and get you a conditional approval quickly if you have that need.
All right. And Kenton, I know Zwade mentioned a website. Any other ways that we could reach you in case we want to find out more about doc-to-doc lending?
Yep, that's thanks, Kevin. That's exactly it. So, our website, the number 2, doclending.com, all one word. For anybody interested, the apply now button is right there on our homepage. It's a fully automated system, takes about 3 minutes to apply. After that application, within 24 to 48 hours, you'll receive a call from Zwade, myself, or one of our physician members on our team. You'll get your interest rate, your APR, and your monthly payment all there to decide whether it's something you'd like to move forward with. And like I said, we're available to speak through all of those terms. No impact on the credit score. It's all done through a soft credit pull. So there's no harm in applying and exploring. For anybody who's interested in the company outside of applying for a loan, there's also a request more information section on our homepage of our website. It'll collect your contact information, and we'll reach out to you shortly thereafter, and we'd be excited to speak about whatever questions.
Great. Kenton and Zwade, thank you so much for your time and insight, and thanks again for being on the show.
Thank you, Kevin.
Thanks so much, Kevin.